the Dinar Daily. Ladies and gentlemen, welcome to today's broadcast, marking a potential pivot point for a dedicated global community. This is a moment that shifts the focus for those who have patiently held the Iraqi Dinar, IQD, and Vietnamese Dong, VND, for many years, transforming the conversation from mere speculation to institutional preparedness. The global banking landscape is now reportedly revealing a set of clear signals, suggesting that the long-anticipated structural adjustments for these currencies may be entering a final, actionable stage, defining the late months of 2025. For a significant period, the international financial community, alongside private investors, has engaged in ongoing discussion, debate, and hope regarding verifiable procedures for a potential revaluation or redemption process for the IQD and VND. Today, the core of the emerging news centers on the apparent surfacing of a verified roster of banks. These institutions are reportedly compliant, their systems are aligned, and they are prepared to manage formal redemption procedures in a structured, secure, and fully institutionally backed manner. This development moves beyond the realm of unconfirmed internet rumors and speculative conversations. The critical distinction in the information emerging today is its grounding in operational readiness. The data is reportedly based on internal system updates, verified procedural alignment, and a level of preparedness that signals a definitive transition from theoretical possibility to tangible financial reality. This detailed institutional readiness is the narrative shift that demands attention. We will now meticulously examine what this alleged list of prepared banks signifies, how their readiness may impact the large community of holders, and why this particular development could prove to be the most consequential factor defining 2025 in the context of these currencies' history. To fully grasp the magnitude of these latest developments, it is essential to contextualize the unique journeys of both the Iraqi dinar and the Vietnamese dong. For decades, individuals who acquired these currencies have navigated a complex environment caught between hopeful rumor and the hard reality of slow-moving economic and political reform. The patience exhibited by this community has been immense, sustained through continuous cycles of doubt and anticipation, all while awaiting a definitive institutional step forward. Iraq's financial narrative, specifically following the year 2003, was characterized by profound economic challenges, including sanctions, extensive reconstruction needs, and a determined effort towards stabilization. The national currency, the dinar, became a focal point for global attention, attracting both seasoned currency speculators and countless small investors whose hopes were directly tied to the eventual reflection of Iraq's burgeoning economic strength and stabilization in the form of a significant currency adjustment. This hope was not merely speculative, but was rooted in the potential of a resource-rich nation rebuilding its financial infrastructure. In parallel, Vietnam's economic trajectory has been marked by a consistent and impressive growth in its gross domestic product, GDP, a robust export-driven economy, and a disciplined approach to monetary policy. This measured, stable approach has quietly positioned the dong as a low-volatility, reliable currency, steadily increasing its financial integration into the global system. Both nations have, in the view of many analysts, now arrived at a critical juncture, the financial readiness zone, where years of monetary reform efforts converge with macroeconomic stability. This financial readiness zone is characterized by a strategic confluence of factors: demonstrable monetary reforms, substantial increases in foreign currency reserves, and the modernization of digital payment and transaction systems. This combination does not just make a currency adjustment a mere possibility, it reportedly renders it operationally feasible for a modern financial system. The publicly circulating list of banks prepared to handle exchange procedures directly attests that the IQD and VND are, for the first time, being treated as assets actively prepared for secure redemption and highly regulated institutional channels, moving past their identity as purely speculative holdings. The emerging bank list is the centerpiece of the news that the investor community has been tracking for many years. While past discussions were dominated by abstract hope and unverified narratives surrounding a revaluation date, the current focus is now firmly anchored on verified, institutionally prepared banks that possess the required operational capacity. The report specifically names major U.S. institutions, including Chase, J.P. Morgan, and Bank of America, as having reportedly completed complex internal system updates and being designated to manage the future IQD and VND redemption processes, signaling a widespread, coordinated effort across the banking sector. Furthermore, Wells Fargo is reportedly positioned as a primary Tier 1 facilitator, indicating a lead role in the process, while HSBC is alleged to be the institution managing the cross-border, international settlement of the IQD and VND. Secondary yet essential institutions, such as Truist Bank and PNC Financial, are noted for focusing on the critical aspects of investor verification and ensuring all procedural readiness is in place. This level of detail is profoundly significant because preparing for such an unprecedented currency event demands far more than just a stated intention. It requires a deep, technical commitment to compliance and system integration across the board. Bank preparation for this scale of currency exchange necessitates comprehensive operational alignment, full compliance with international standards, deep system integration, rigorous internal system testing, and extensive staff training and new procedures. The reports indicate that these major banking entities are ready to manage both the digital and physical aspects of currency processes, from the initial authentication of currency notes to the final transaction reconciliation. This readiness signals that the practical steps toward redemption are being executed in a highly structured, verifiable, and secure manner, built on institutional foundations. What lends extraordinary weight to today's revelation is the alleged tight integration of compliance systems with the newly established operational readiness. Banks that are preparing to handle these exchanges are reportedly not simply opening new customer service desks, they are activating complex internal verification systems that are designed to align seamlessly with central bank protocols, a requirement that ensures legitimacy and transparency. These systems are reported to integrate modern digital ledger technology and real-time transaction monitoring, which is essential to ensure that every currency movement, from large institutional transfers to individual redemptions, is verifiable, traceable, and fully auditable by relevant financial authorities. This unprecedented level of integrated financial infrastructure is a game-changer for retail currency holders, offering a framework designed to build confidence. It suggests that once the redemption is initiated, the entire process is set to be secure, controlled, and compliant with the strictest global banking standards, a marked departure from the informal or gray market exchanges of the past. Unlike previous periods characterized by simple speculation or reactive market surges, the current framework is procedural and grounded in data integrity and established compliance protocols, minimizing systemic and investor risk. In practical terms, this methodical groundwork strongly suggests that the currency exchange process, once activated, is designed to unfold smoothly, efficiently, and with full transparency. This procedural rigor is critical for minimizing risk for both the individual currency holder and the large financial institutions managing the sudden influx of liquidity. The meticulous planning suggests a deliberate attempt to manage this event with the highest degree of professionalism and control, ensuring stability across the financial ecosystem, which is a key requirement for any large-scale currency adjustment. To fully appreciate the significance of this preparatory moment, it is essential to briefly revisit the historical backdrop of these two currencies. The Iraqi dinar has been the subject of intense speculative interest for decades, particularly in the aftermath of the 2003 conflict and the resultant sanctions that severely restricted the nation's financial activities and hindered its overall economic stability. For over 20 years, IQD holders have demonstrated extreme patience, watching and waiting as political settlements and complex economic reforms slowly but surely laid the foundations for a potential, justifiable revaluation that would better reflect the country's oil wealth and recovery. Vietnam, during the same period, emerged as a proactive regional economic powerhouse, backed by highly disciplined monetary policies, steadily rising GDP figures, and a deepening integration into intricate global trade networks. Both the IQD and the VND now stand at this pivotal moment where the macroeconomic stability of their respective nations is converging with the operational readiness of major international banks. The revaluation discussions, which were previously dominated by unverified narratives and rumors, are now reportedly anchored in institutional systems, creating the first solid bridge from abstract speculation to a tangible financial execution. Iraq's long and challenging path to this point has been characterized by multiple significant monetary reforms, the critical stabilization of its oil revenues, and a determined, necessary adoption of modern digital payment systems designed to enhance transparency. Inflation, which was once a debilitating national challenge, has reportedly declined steadily, and the nation's foreign reserves have reached levels not seen in 2 decades, providing a solid cushion for the central bank. Strategic partnerships with multinational financial entities and consistent adherence to IMF-backed reform programs have collectively positioned Iraq to manage a potential currency adjustment with measured responsibility and control. The recently revealed bank list, directly linked to advanced compliance and system readiness, is the operational culmination of these years of complex structural reforms. A confirmed roster of banks prepared to handle IQD exchanges does not merely signal the theoretical possibility of a revaluation. It strongly suggests the dedicated and serious institutional groundwork required to implement such an event safely, with full transparency, and with maximum effectiveness. This shift in preparation underscores the gravity of the current moment and the depth of the institutional commitment. Vietnam's inclusion in the emerging bank readiness list similarly highlights the country's strategic, forward-looking approach to global financial integration. By aligning its domestic financial infrastructure with the highest international banking standards and proactively upgrading its digital transaction and clearance systems, Vietnam has ensured that the dong is strategically prepared for any potential currency adjustments or revaluation scenarios. These proactive measures reflect careful long-term strategic planning rather than any short-term speculative intent, prioritizing financial stability, global transparency, and reinforcing investor confidence in the country's currency management. For holders of the Vietnamese dong, this institutional preparedness creates a predictable and secure environment where any potential gains from VND appreciation would be supported and safeguarded by robust institutional readiness and secure audited operational frameworks. In essence, Vietnam's disciplined approach reinforces its growing reputation as a stable, trustworthy, and increasingly influential participant in the complex global financial landscape, demonstrating a commitment to secure and compliant financial movements. Sources familiar with the operational planning indicate that the actual currency redemption process, once officially activated, is anticipated to follow a highly structured, tiered approach designed for control and security. The initial phase, commonly referred to as Tier 4B or the private phase, is specifically targeted at pre-verified investors who have already completed the necessary identity and currency holding verification requirements through established channels. This is the stage where the security protocols are initially tested under controlled conditions. These pre-verified individuals are reportedly expected to receive direct, secure communication via designated and authenticated channels. The purpose of this secure communication will be to provide specific instructions on how to schedule appointments at designated redemption centers. These specialized facilities, the reports suggest, will be equipped with the most advanced authentication tools, adhere to strict non-disclosure agreement, NDA-based verification protocols, utilize secure payout procedures, and provide access to dedicated financial advisors capable of managing high-value transactions efficiently and compliantly. This methodical and phased approach is fundamentally designed to ensure that the early-stage liquidity flows are tightly controlled, fully traceable, and compliant with all regulatory mandates. It serves the crucial function of establishing an operational proof of concept before any broader public rollout. Following this carefully managed initial tier, a much wider public rollout is anticipated through standard, established banking channels of phase known as Tier 5, designed to accommodate the general investor population. This public phase is expected to closely mirror the intense compliance and procedural rigor of the private tier, ensuring fairness and security for all participants. The reported planning also integrates special considerations for senior investors, including provisions for one-on-one personalized assistance and specific accessibility measures. The primary goal of the public phase is to provide standardized, transparent, and easily accessible procedures for currency redemption, enabling wide participation while simultaneously minimizing any potential operational or fraud risk associated with a large-scale event. By structuring the entire rollout in these carefully calibrated phases, the designated banks are actively preparing for a controlled management of the anticipated surge in liquidity. which is essential for maintaining stability for both large institutional investors and the vast number of retail currency holders. This proactive liquidity management is a key indicator of serious institutional planning for a systemic financial event, rather than a reactive measure. Speculative analysis, which is always abundant in this community, suggests that even modest upward adjustments in the official exchange rates of the IQD or VND could, theoretically, produce transformative financial outcomes. For instance, the Iraqi Dinar, currently valued at roughly 1,310 dinars per $1, IQD USD, could hypothetically adjust significantly. Such a movement, if it were to occur, would have monumental implications for those holding private allocations, potentially multiplying the stated value of long-term holdings significantly. Similarly, the Vietnamese dong, with a current market value of approximately 24,400 dong per $1, VND to USD, could experience a controlled appreciation against the dollar, generating substantial gains for compliant currency holders depending on the final rate. These purely hypothetical scenarios emphasize why institutional readiness, robust operational infrastructure, and secure bank procedures are critically important. They are the mechanisms designed to ensure that any major liquidity surges are managed safely, efficiently, and without causing undue stress on the broader financial market. One of the most compelling aspects of this newly revealed bank readiness list is the alleged degree of synchronization across the multiple financial institutions involved. Compliance systems, the reportedly integrated blockchain-based reporting, and the digital ledger infrastructure are all said to connect the participating banks directly with the central bank records in near real time. This level of coordinated reporting provides an unprecedented degree of transparency, auditability, and full traceability for all transactions, a crucial step in mitigating the risks historically associated with speculative or informal currency exchanges. This multi-institutional coordination is a powerful signal that the financial system is not merely ready to theoretically accommodate a redemption process. It is actively and technically prepared to manage all transactions within a highly secure, internationally regulated framework. For long-term investors, this provides a vital layer of confidence, assuring them that the process will strictly adhere to established, formal protocols rather than relying on informal or rumor-driven channels, which is a major concern for this community. While unverified rumor has often driven conversation surrounding any dinar and dong revaluation in the past, today's documented developments reportedly reflect a high degree of formal institutional observation and oversight. Key regulatory bodies, including both domestic financial authorities in Iraq and Vietnam, and major U.S.-based regulators, are reportedly monitoring the technical integration and readiness of these bank compliance systems very closely. Far from posing an obstruction, their oversight ensures that the resultant liquidity flows will follow legal and secure pathways, which is critical for minimizing risk to the domestic banking operations and providing security for the individual currency holders involved. This regulatory oversight adds yet another crucial layer of confidence. For those who have patiently held the IQD or VND, it strongly emphasizes that the emerging redemption process is being treated as part of an organized, fully verifiable, and controlled financial framework, consistent with global best practices. The transition from abstract rumor to the reality of institutional execution is the most profound development of the year and suggests that the financial stage is being set for a significant operation. To help put the current situation into context, it is instructive to compare it with previous historical milestones. In 2014, for example, speculative surges in the dinar market often left investors with no truly verifiable liquidity channels or exit strategies. By 2017, significant political progress in Iraq removed some key barriers, but practical, institutional redemption mechanisms remained limited and largely undefined. The IMF-backed reforms of 2021 introduced much-needed structural stability to the Iraqi economy, yet the required operational readiness at the bank level was still not fully achieved across the board. Fast forward to 2023 and a series of key technical advancements were implemented, including the integration of blockchain-based ledgers and Swift overlay capabilities, which began creating the necessary traceable systems for large-scale transactions. Finally, in late 2025, the reported verified bank list and the coordinated, system-wide compliance updates marked the first demonstrable moment where long-term speculation begins to technically intersect with institutional reality, signaling a crucial transition from unconfirmed rumor to imminent, verifiable execution. Current reporting advises investors to take decisive, necessary steps to organize their holdings, which should include the verification of their currency note authenticity and the preparation of all essential legal documents. These documents reportedly include a government-issued photo ID, documented proof of purchase, and all prior transaction records related to the currency acquisition. This meticulous preparation is not merely optional. It forms a critical part of the procedural requirements that compliant financial institutions are reportedly enforcing for all redemptions, spanning both the private and public tiers of the rollout. Early adopters and those who are identified as pre-verified investors can reportedly anticipate receiving highly structured guidance directly from their designated banks. This guidance will likely include secure instructions for the scheduling of appointments, detailed steps for the verification procedures, and one-on-one support for those managing exceptionally large holdings. The overwhelming emphasis on preparedness highlights the necessity of methodical engagement with the process, rather than a reactive or speculative rush, ensuring a smooth and compliant experience. Beyond the complex numbers and the necessary technical details, this moment represents a rare and powerful alignment between the immense patience of the long-term investors, the technical readiness of the global institutional framework, and the macroeconomic stability achieved by both nations. Those who have tenaciously held the IQD or VND through many years of uncertainty are now positioned at a truly unique and significant threshold. The emerging bank list functions not only as a crucial signal of procedural readiness, but also as a form of validation for the years of persistence, careful planning, and quiet holding that has characterized this community. It serves as a profound reminder that major global shifts, whether financial, political, or economic, often begin with quiet, deliberate planning. They build momentum behind the scenes, far from the public eye, before reaching a critical point of operational activation. For all currency holders, remaining fully informed, professionally vigilant, and completely prepared is absolutely essential to ensure that they can act decisively and correctly when the official, operational instructions are finally released. A potential major adjustment of the Iraqi dinar's value would not only benefit the community of private currency holders but could fundamentally transform Iraq's domestic economy on a massive scale. A demonstrably stronger currency value would significantly enhance the nation's import capacity, directly reduce inflationary pressures on the local population, and dramatically improve access to global markets for local businesses. Critical sectors within Iraq, including the dominant energy industry, its developing agriculture, and the vast infrastructure projects, could all experience accelerated growth due to lower, more favorable costs for imported materials and necessary technology, fueling a widespread economic recovery. Furthermore, a significant improvement in local purchasing power would strengthen local households, enhance national savings rates, and robustly support the sustainable expansion of the middle class, which is vital for long-term stability. This macroeconomic scenario underscores precisely why institutional preparation and the necessary compliance integration are not just bureaucratic steps but are absolutely crucial for the safe handling of a major financial event. The ultimate stakes extend far beyond financial speculation and are directly tied to tangible, verifiable national economic development and prosperity. Vietnam similarly stands to gain significantly from the structured operational readiness for the Dong. A controlled appreciation scenario would enhance the nation's export and import dynamics, make the country an even more attractive destination for multinational investment, and further solidify Vietnam's already growing position as a stable and reliable financial hub within the dynamic Southeast Asian region. The alleged integration of digital ledgers and compliance alignment further optimizes complex cross-border transactions, improves overall settlement efficiency, and successfully reduces transaction costs for international trade, all of which are net positives for the economy. By strategically combining a gradual, controlled currency adjustment with unprecedented institutional preparedness, Vietnam is ensuring that any potential gains are fully sustainable and directly aligned with its long-term national economic strategy, rather than being driven by short-term speculative forces. This disciplined, measured approach is a hallmark of a nation successfully navigating a delicate financial transition, prioritizing stability and predictability over rapid, destabilizing change. The global financial community is watching these precise preparations with intense interest. For currency holders in the United States, the potential revaluation or redemption of the IQD and VND represents a dual reality. It is both a significant financial opportunity and a clear signal of global financial change. Those who have held these currencies through the years of patience may soon see a tangible, verifiable return on their holdings, while the institutional readiness ensures the entire process is regulated, securely managed, and fully auditable by relevant authorities. The planned tiered redemption process, the use of advanced verification systems, and the reported extensive bank coordination collectively provide confidence that the flow of liquidity can be managed safely, dramatically reducing the risk of fraud or mismanagement that often plagues informal exchanges. All currency holders are strongly advised to remain attentive, keep their documents perfectly organized, and be prepared to act methodically when official, verifiable communications are released from designated banking channels. The profound impact of this emerging readiness extends well beyond the individual investor. Global markets, particularly those involved in energy, commodity trading, and the broader Southeast Asian finance sector, could experience powerful ripple effects as a significant and controlled volume of new liquidity enters mainstream financial channels. Banks, regulators, and advanced compliance systems are reportedly preparing for this transition with a high degree of seriousness, signaling that the potential currency adjustment is being treated as an operational near certainty rather than as simply hypothetical speculation. International investors, professional institutional managers, and major currency traders are all closely monitoring key indicators, keenly aware that a structured, verifiable movement in the IQD and VND could significantly influence broader, global foreign exchange strategies and allocations across all asset classes, necessitating a careful, strategic response from all professional participants. While the revelations regarding institutional readiness are certainly significant and highly encouraging, all investors must continue to exercise extreme vigilance and caution until the final phase of activation. All redemption actions should be strictly guided only by official communications received from verified designated banking channels and absolutely no other source. Any random unsolicited emails, unverified social media messages, or unconfirmed personal contacts should be completely ignored, as the official operational procedures and centralized compliance systems are the only authoritative source of truth in this complex process. Continuously monitoring key indicators, such as bank screen activations, official Forex updates, and formal compliance bulletins, will be essential to help investors accurately understand precisely when the complex institutional systems are officially live and fully ready to process transactions. Staying informed and remaining professionally vigilant is the ultimate key to capitalizing on this unprecedented alignment between global financial infrastructure and the patient, years-long readiness of the investor community. In conclusion, the emergence of this reportedly verified list of prepared banks represents far more than a simple financial development. It is the first tangible institutional signal that years of patient investor expectation, complex institutional framework development, and crucial macroeconomic preparation are finally converging at a single point in time. Those who have held the IQD and VND through years of market uncertainty now face a moment where their persistence is meeting institutional preparation. The meticulous steps taken today, ranging from personal document organization to a readiness for full verification, will directly determine how smoothly each investor navigates the significant phases that lie ahead. The world of currency, global finance, and international investment often reveals its most significant opportunities quietly, building a substantial foundation behind the scenes before the public fully realizes the immense scale of the change. Today, that quiet preparatory work has reportedly achieved a critical operational mass. The advice remains firm: prepare your holdings, stay fully informed, and act methodically, because the institutional stage appears set for what may prove to be one of the most pivotal and complex financial operations in the modern history of dinar and dong investment.